beaten up, which I quite often look at for potential turnaround situations. I have this saying that sometimes good news can be bad news, and sometimes bad news can be good news. So sometimes a beaten up area is something you want to put on your watch list to start looking. And there's nothing more beaten up perhaps than the US banking and financial industry. Before we get into that, let's just have a look at the S&P, what happened last night. And we can see across here on the right, this is the Standard & Poor's 500. It's the top 500 stocks in the US stock market. And this is last night's movement. The market was up 1.35%, very encouraging for the market. And then we have the more active market, more growth-orientated market, normally the Nasdaq Composite, often called the tech-heavy Nasdaq. And here we are, last night up 0.72, broken back above this red support level. Again, if you look in howtotradethestockmarket.com, you'll get to understand what these levels mean. Just a quick brief here. If the stock market is rising and it finds an area which it finds difficult to break through, this becomes known as a resistance area. It's the area that sellers are coming in, forcing the price back down. Sometimes you get these false breakouts. The false breakout means you get a breakout and the market doesn't follow through to the upside. And in this instance, what happened, the market rose, came back to the previous resistance point, which now becomes support. The market bounced, but the sellers came in at a quicker pace than before, a lower level, pushing the market down below the support level. We just managed to rise above, and then we really started to break down. At this point here, we were in line with this support level. This support level here is resistance here, so that it came support. Quite easy here to draw a few trend lines. Trend lines are quite good. Just disappear there. Trend lines are quite good because you know they can remind you of where points are. So if we put this on that top and go along to here, just around here, we can see then that this resistance point here was support here, was support here. Then we suddenly got buying interest at this level, and then we had this strong move up. Quite often when you get a break through a downtrend, you get this correction phase, then buy-ins come in, and it's looking quite good now. If we can clear about this level here, then you know it'll be even more convincing. But what I really wanted to talk to you about was the banking sector, because in 1990 the US went through a similar situation where a lot of their banks were technically bankrupt, and you know they're in deep stuck now. Let's put it that way, because of the global financial crisis and their irrational lending and the greed factor that went into the whole market. So let's have a look at maybe Citigroup first, because that's a well-known stock. That was technically bankrupt in 1990. It fell to $1. The front of the Wall Street Journal said Citibank was technically bankrupt. And then lo and behold, I think it was 7 years later, the stock had risen to 57. Now let's see if maybe we can even see that period. So here we are. This has been stock adjusted. So, you know, the stock readjusted here is $13, and it went from $13 to somewhere in the region of $500 in 8 years. That's the type of growth you can get when the game is on. Conversely to that, then we traded sideways really since 2000. You know, we were breaking down, there was a rally up. This is when all the stupid credit policy was going on. We went sideways, and then when the global financial crisis hit and the mortgage-backed security industry hit, if you didn't operate stop losses, you saw your wealth decline from almost 500 at one stage to somewhere in the region of $2 or $3. Where are we today? Let's zip back and look at the weekly chart, the daily chart. You can see here just how much that stock fell. And let's zoom in, and zoom in. So here we go. This is the stock over the last 2 years. What's important here is since the beginning of the year, the stock has declined from 50 to 37. That is a 26% fall. When the market itself, the overall market has been trading sideways. Last night was quite a reasonably strong evening for the market as a whole, and the banking sector has had a major pop. If we look at Morgan Stanley, you'll see what I mean. Towards the beginning of the year, it was 32. If I were to put some trend lines on there, you can see what's going on. That's quite easily. And in how to trade the stock market, you'll see how to work all these trend lines. But basically, there's resistance going on, and we're going down this downtrend. This tells you the law of supply and demand. Here, there's more supply coming online and forcing the stock lower. People are not wanting to pay such high prices, and eventually we get down here, but a climatic selling, and then a huge rise to the upside. That rise from somewhere in the region of, let's say, $20 to 24, a 20% move is quite significant, but not a trend. That's one up day, that's 2 up days. A trend is where you get rising market, profit taking coming in, buyers buying in here, going to new highs, declining, buyers coming in at a higher level here, and then we're off into a nice trend. But what I want to really highlight just now is the banking sector is being beaten up. Once the US decides, however much more illusionary money it's going to create to pay the government's obligations, and I believe with it at some stage some watered down version of capital adequacy for banks, we could quite well see this whole sector pop. This is Wells Fargo Bank, again another stock correcting from 34 to 25. That's 9 on 34, is about a 30% decline. This is one to watch. This is an ETF, the ProShares Financials. Again, we seem to be getting a bottoming out here. If we were to go all the way to the left, and let's see how we're going to draw a few trend lines here, we can see, let's just take it from here, all the way across here has been a very interesting point in the markets because, let's just get that back to daily. We had resistance here to any upside movement. Then we broke out and the market collapsed back. Again, resistance to upside movement. And then we've corrected back to what was the resistance point, which should now be support. And then we've had this very strong update. So it's too early to call it a buy yet, but I just want to bring to your attention, for those people who are looking to get into some turnarounds, that the financial sector is looking quite interesting. So just let me flip you through a few. JP Morgan up 3.25% yesterday. Looks like it's trying to break out of that downtrend. Citibank I already showed you. The Bank of New York Mellon Corporation corrected from 32, almost 33, and to just over 24. Quite a strong day. BlackRock, more financial services and asset management, hadn't corrected quite the same, but still affected, but a reasonable up day. S&P I showed you, composite, and then this couple of interesting ones. This is American Express. This is in a great uptrend. This has broken through all this resistance, and then this technically here is a buy signal on a technical basis. Up to you whether you decide to buy it, but that on a technical basis is a breakout. If we go a bit lower, we've got Bank of America, which has been absolutely devastated. If we go back to 2010, stock fell 50%. MasterCard, another one to watch. So the credit cards look very good, suggesting that people are back out there borrowing. Let's just put a couple of trend lines on here. If we go from early 2010, this is where all the resistance came. We broke up through that, we've tested back, and it looks to me as if we're off to the races. One thing I just remembered I forgot to put on there, which I think looks very good, is Visa. And again, you can see the breakout. I just want to add that to my watch list. And this, I've created now a banking and financials watch list. So that's kind of in there. Let's just take another look at it. Yeah, a lot of resistance just below where we broke out. So if we take that top there and we go all the way across here, that is a resistance point. Late June, huge rally to the upside. Didn't really want to pull back, and now it's trying to go higher. And if we go like this, you'll see the potential here. This is 2009 when the stock went from 40 to 100, so 150%, declined back about 35% of that move, consolidated, and is now broken out. Let's just have a quick look at MasterCard before we round up. Similar scenario, strong move here, sideways movement, now we're breaking out to the upside. And the last credit card that we want to look at is American Express. This was even better. It was rising really from 10 to 50, then corrected back to 36. And again, we've just broken out of this significant resistance point, which I'll just draw on here for you. There we go, we've had a breakout to the upside, looking quite positive. So that's all from me, from Graham Bibby at How to Trade the Stock Market today. But please keep in touch with the YouTube videos and demonstrations. And if you want to subscribe to our membership, please look at howtotradethestockmarket.com. This is Graham Bibby signing off on the 22nd of July, and thanking you for listening.